Welcome back to the channel. Today isn't just another day in crypto. While Bitcoin holds above $112,000 and Ethereum trades steady at $4,200, the real story is about power and control. China is preparing to launch yuan-backed stablecoins that could challenge the dollar's dominance in crypto. The United Kingdom is sanctioning entire networks tied to Russia's use of a rouble-pegged coin. And all of this is happening on the eve of Jerome Powell's Jackson Hole speech, where a single line could swing the global markets and decide crypto's next big move. This is the daily crypto news for Thursday, August 21st, 2025. Traders everywhere are tuned into Jackson Hole this week, that annual central banking event. It feels like everybody's halfway leaning forward, expecting a word, a hint, a pause, a twist. Will Powell say rate cuts are coming? Or will he echo the air of caution we've heard for months? The ripples of that tone, or lack thereof, could move everything. Stocks, commodities, bonds, and yes, of course, crypto. Right now, the global crypto market cap hovers just under $4 trillion. Bitcoin continues to hold the lion's share, more than 57% of the total. That's the legacy effect. When BTC speaks, the rest of the space listens. And speaking of liquidity, stablecoins, those dollar-pegged workhorses, encompass about $280 billion. They're the plumbing, the grease, the pipes that keep swaps flowing, arbitrage alive, and decentralized platforms humming. Okay, let's walk through the day's top 10 by market cap in live conversation. Bitcoin is at $112,200. No fluff, no rounding. That's where the number sits right now, at this moment in time. There's solidity there, but also the pressure to move one way or another, depending on the tone from Jackson Hole. Ethereum sits at $4,211. Again, a moment-in-time snapshot. Still digesting its own set of highs, with DeFi and smart contract activity holding steady. Quiet times build the base before the next wave. XRP is holding firm around $2.88, right in the third-place spot by market cap. That's meaningful, considering the legal overhang that just cleared last week. The shift in headlines, the easing of uncertainty. That's sending ripples into investor psychology. Tether and USD Coin, both hovering just under $1 as expected. Their quiet solidity is exactly what we need from them. Stable, dependable. Binance Coin trades at $838. BNB continues to ride the wave of exchange-led utility, ecosystem expansions, and growing use in tokenized assets. Solana sits at $180. It's done exceptionally well as the high beta play, still very much hooked to Bitcoin's broader momentum. Lido staked Ethereum sits just over $4,200 as well. Interesting how the staking derivative is almost nearly matching Ethereum itself in price. That speaks to demand for liquid staking and diverse ways to hold Ethereum. Tron holds steady and trades at 35 cents. Still very much in the middle of the pack, with constant chatter in meme, DeFi, and stablecoin activity. Dogecoin is at 21 cents. Yes, Dogecoin is still here, still reflecting the sentiment play, meme energy, and retail participation that remains very much alive in the space. Alright, now let's get into our first substantial story, because it's one of those policy-level moves that can quietly, structurally shift the ground under crypto. China is reportedly, and I want to stress, we're talking serious policy conversation, not unfounded rumor, considering backing a yuan-denominated stablecoin. This is not a throwaway headline. It's a conversation at the banking and regulatory level. The thinking appears to be that they could pilot this in Hong Kong and Shanghai, two financial hubs with already existing digital yuan infrastructure, and where regulated innovation can thrive in controlled environments. If this rolls out, it would be the first credible challenger to the dollar-based stablecoin paradigm. Think about what that means. Today, virtually every trade, every remittance, every tokenized asset settles via dollar panes, via USDT, USDC, and similar. If a backed stablecoin is credible, if it's liquid, regulated, auditable, it gives traders, exchanges, institutions, even governments, another route. From Asia to Africa, from China to the Middle East, alternatives to dollar routing could reshape corridor flows. That would reverberate across DeFi, cross-border remittances, trade finance. Strategically, it's savvy. China can limit speculative activity inside its borders. The bans are still real, while exporting a digital yuan ecosystem abroad. It's surgical. Block the casino at home, but export the rails globally. For market participants, that means arbitrage flows could shift. Spread dynamics in Asian hours might tighten or expand, depending on where liquidity flows. USDT and USDC issuers may need to pivot, scaling operations in Asia, increasing transparency, or offering new redemption paths. If this pans out, the fundamental liquidity structure of crypto could become multipolar. Slowly, then suddenly. That's the real tectonic shift we're watching. Now let's transition seamlessly to story number 2. Because here's where stablecoins collide with geopolitics. The UK has just sanctioned certain Kyrgyz crypto networks. Networks allegedly linked to a rouble-pegged stablecoin called A7A5, accused of enabling sanctions evasion for Russian actors. We've got a cry and a pushback from Kyrgyzstan's president, Sadir Japarov, who insists local banks weren't involved, and has personally appealed to leaders in London and Washington. But London's position is firm. Stablecoin ecosystems can now be direct targets of sanctions policy. This matters, listeners, because once a stablecoin or its rails get sanctioned, liquidity can vanish faster than you can blink. Exchanges may delist or restrict it. Market makers pull quotes. Arbitrage pathways vanish. Even unrelated pairs could wobble because settlement rails just got chopped overnight. We're seeing the precedent. Today, a ruble peg. Tomorrow, it could be tokenized commodity baskets, synthetic duo stables, or offshore redemption desks. The message is clear. Tokenization does not equal immunity. Regulators will press for audits, KYC, attestation, compliance at every layer. And here's the inside scoop. If we circle this back to our first story, a yuan-backed stablecoin in global use would face the same scrutiny from day one. Western regulators will watch the audits, the off-ramps, the counterparties, the travel rule compliance, or they'll shut the door. So put those stories side by side. On one side, China is quietly laying plumbing for yuan-based liquidity. On the other, the UK is drawing lines around what's sanctioned and what's not. It's the new battlefield, quietly redrawing who controls the pipes. And with that, who holds influence in crypto's plumbing. Coming back to the moment, let's talk markets and what happens next. Bitcoin is trading above 112,000. Patient, waiting, balanced. Ethereum holds in at 4,200. The tone at Jackson Hole could tip the scales. If Powell turns softer, if he hints at easing or delayed tightening, expect a push toward higher highs. Bitcoin could break the lid and drag Ethereum and the alt cohort upward. If he stays hawkish, will likely stay range-bound. XRP is currently holding at $2.88. With its legal overhang now cleared, analysts are modeling potential paths to $4, $5, even $6 in this cycle, particularly if macro liquidity returns. Solana at 180 continues to act like a high beta play. It moves with Bitcoin, but with added flair. And let's acknowledge again that stablecoin supply, the $280 billion out there, remains the market's heartbeat. If that liquidity ebbs, execution gets sluggish, spreads compress. If it flows, access opens, swaps widen, risk-on rotations ramp. Everything rides on that flow. So, here's the theme for today. Liquidity is the new battleground. Between China's quiet push for a yuan-backed stablecoin and the UK's assertive sanctions on stablecoin networks, the battlefield isn't about blockchain speeds or yield apers anymore. It's about who controls the plumbing, which currencies, which tokens, which rails. And at the same time, Powell and Jackson Hole may still decide the oxygen level for risk assets. If you're trading or investing, listen for Jackson Hole's tone, watch for announcements from Hong Kong finance regulators, monitor sanctions chatter from the UK or US. All of that will inform liquidity access, spread structure arbitrage economics. Bitcoin might remain the headline grabber, but today's real story is about who defines the liquidity backbone, and that defines how everything else moves. Let's breathe again and let all that sink in. Thank you for being with me on this stretch of audio. If you're a daily listener or just dropped in, I appreciate your time. We'll be back tomorrow with more market moves, policy whispers, and geo-financial events. That's today's Daily Crypto Roundup, August 21st, 2025. We'll meet again soon. Stay sharp, stay curious. And when Jackson Hole drops its tone, we'll be right there together to unpack it live. Like and follow, and we will see you at the top.